keep saying to people, look, when the interest rate was zero, Bitcoin was around 65,000, the peak in 21. Rates went to 5%, they're still there, and Bitcoin is now at the same price. When that short rate goes from 5 down to 2.5 or 3, Bitcoin should easily double just on that. Forget about all of the myriad wonderful developments going on chain and in this space, all the innovation. Forget about all of that. If you just look at that one measure, I think there's cause for being super bullish right here.
One RoundTable Partners founder, Dan Tapiero, reveals why Bitcoin might see significant growth soon. He notes that back when interest rates were very low at around 0%, Bitcoin reached a high of $65,000. Now, even with rates much higher at 5%, Bitcoin's price is still around that same level. Tapiero believes that if these rates were to drop back down to around 2.5% to 3%, Bitcoin could see a big jump in value, potentially doubling. What's interesting is that Tapiero isn't even considering all the other positive developments happening in the Bitcoin world. He's simply focusing on how a shift in interest rates alone could trigger a major increase in Bitcoin's price, making him very optimistic about its future. Stay until the end of the video to hear Dan Tapiero as he reveals how he views the current global economy. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Dan Tapiero on the growing use of blockchain and Bitcoin.
I guess, look, I look at things from a lot of different perspectives. I mean, I always start with the big global macro. What are the big central banks doing? What does liquidity look like? What are the broader markets doing? And I think, right now, my focus is the 2-year and the 10-year notes in the US have dropped down to new lows in yield. The 10-year, I think, in the 370s now, and the 2-year 390. This is a trend that I'd been anticipating for quite a while. The drop in inflation that we've had over the last 18 months has been pretty severe, and the Fed has maintained a much tighter than expected policy, at least by me. To be fair, I did not expect them to raise from 0 to 5% as quickly as they did. Frankly, I thought it was a bit unwarranted, but growth stayed stronger than one might have expected. And now I think we're seeing a pretty severe slowdown. And so the unemployment numbers last time around were weaker than expected. And, every bit of data for the past 2-3 months has more or less slowed down, except for maybe the housing data, which has just picked up a little bit in the US. In Europe has been weak. The Swedish central bank, in fact, just cut rates. The UK is cutting. And most concerningly, I guess, is China. I mean, China's economy has been very soft over the past year, and rates there are back down to 2%. So I start with this picture of where is the macro economy going. I think we're slowing, not a recession or a panic necessarily, but and I think that's going to be, and it has been bullish for gold. Gold just made an all-time high last week. And I think people in the new world, in the crypto digital world, the world that I'm in, they ignore, some of these traditional market prices. But gold making an all-time high is a sign of liquidity coming. And also the dollar, I think, has begun its bear market. The euro yesterday hit, 111. That was the highest level in some time. And I think it's going to continue. And so over the next 2, 3, 4 months, as I look out, I'm very bullish on Bitcoin and Ethereum. Those to me are the core assets of the digital asset ecosystem broadly, as I'd call it. The other cryptocurrencies to me are more venture projects. I think Solana probably is the one cryptocurrency that's maybe moving towards becoming a core asset. But I look at that broad background of the traditional macro, and I think it's very supportive for core crypto. But if you look beyond just the core assets, you see that the level of usage and interaction with blockchains has really exploded in the last 6 months. Part of that is attributable to the ETH and Bitcoin ETFs that have brought new people into the ecosystem. Part of it is a result of Coinbase's L2 base, which has onboarded a lot of people into DeFi. You have new things like DPEN and RWAs, which are small but are taking off. And of course, the stablecoin business has been extremely strong. So you look at, I look at it, as you see, from 20,000 feet.
I was going to say, Dan, you're watching everything this morning.
Well, I can't avoid it. I don't know. I'm an old guy in the space, and I spent, 25 years managing a portfolio and trading in the old macro markets, and was a gold guy and still am. And I think crypto people look at me and like, how can you be a gold guy and a Bitcoin guy? And then deeper down, the companies we invest into are all ones that are very active within the broad digital asset ecosystem. And so through 10T and 1RT, I've invested into 24 different businesses in the space in the growth stage. We've deployed, the AUM today, I think, is about 1.4 billion. We have board representation on 12 of our 24 businesses. So we really know what's going on within what I call the growth stage. So that's a lot there.
It's referred to Bitcoin as digital gold, but it seems like the two are performing a little bit differently than each other right now.
Well, I wouldn't really say that. I mean, they are, of course, because Bitcoin has massively outperformed gold over any time period, reasonable long-term time period. But I mean, look, as our funds are 10-year life funds. I'm a long-term investor. The difference between Bitcoin at 60 and 70,000 is nothing. Like for me, essentially, Bitcoin is at the all-time high. Whether it's 10 or 15% lower or higher, it's still, I think we'll be, over the next 6 months, I think we'll be over 100,000 in Bitcoin and probably over around 5,000 in ETH as well. I mean, I think there's a big bull rush coming. And look, sometimes gold is maybe a little ahead, sometimes it's behind. I think because Bitcoin is broadly speaking more of an emerging asset, at least versus gold, which is 5,000 years old, it tends to be more, there's more gamma there. It moves more quickly. And I think the upside, of course, in Bitcoin and ETH is much greater, but both are a reflection of global liquidity trends. And so when liquidity is plentiful, which I think the markets are beginning to sense that it's going to become, these liquidity assets move. What I would say more importantly is that with or without, or regardless as to where the short interest rate is, the Federal Reserve short interest rate, the activity in the on-chain world is up at least over 100% in the last 6 months. And that's with rates having stayed to the same place. And I keep saying to people, look, when the interest rate was zero, Bitcoin was around 65,000, the peak in 21. Rates went to 5%, they're still there, and Bitcoin is now at the same price. When that short rate goes from 5 down to 2.5 or 3, Bitcoin should easily double just on that. Forget about all of the myriad wonderful developments going on chain and in this space, all the innovation. Forget about all of that. If you just look at that one measure, I think there's cause for being super bullish right here. I think the market's already moving towards pricing in, the right scenario. I think he sees the data. He's been a little bit stubborn, I think, easing because they were late to hike, and then they overhiked. And look, the 2-year note, as I said, is at a 3.9 yield. The Fed funds rate is 5.25. It's already massively inverted. So the market already is pricing in multiple cuts coming from him in the next 6 months. My guess is he just confirms what the market's already priced in. Normally, folks investing in crypto just kind of YOLO, into some crazy, low market cap coin and hope it goes up 1,000x, right? Or they're playing in Doge or whatever it is. I don't really do that. I think that this sector, is, I don't want to say it's mature, but people don't often realize, look, there's $3.5 trillion of value sitting in this digital asset ecosystem. So that's 2.5 trillion is the value of all the cryptocurrencies, plus another trillion of value in the equity, the businesses in the space. And so the macro at this stage, and I think for this next stage, is important. China is the second largest economy out there. I think you've got to be in touch with what they're doing over there. And it's not that difficult. I have a Bloomberg, of course, as I have for 30 years, and I know many people don't, but you can follow the economic data. The money supply in China has been very weak. The consumer has been soft. Real estate prices have come in quite a lot, and they've had a lot of difficulty with their stock market. The Hong Kong market earlier this year was at a price that essentially was unchanged from over 20 years ago. Now imagine, I think it's improved a little bit, but imagine in the US if the NASDAQ were at the same price that it was 20 years ago. I mean, the whole country would be in revolution. Mm-hmm. I guess what I'm saying is that things have been weak there, and I think that's exerted deflationary pressure to the rest of the world, and I think actually helped slow the US inflation picture a bit. So the world is completely interconnected. It's just, as you said, it's a lot to keep track of. And sometimes it doesn't necessarily have impact. Like, there are times when China can be weak and it may not mean much for the rest of the world. But right now, I think we have sort of a synchronized global slowdown. It's not diabolical. It's not, cataclysmic or anything, but it's definitely a slowdown that's going to lead to lower short interest rates, a bear market in the dollar, which is not bad, dollar going down 10, 15%. And I think very supportive for the main crypto assets as well. So it's really China. Europe doesn't really move, doesn't move that much. It grows 2% or it doesn't, and inflation pops up and comes down. So interestingly, though, we have a pretty significant position in Kraken, the second largest exchange in the US, after Coinbase. It's a private company, of course. And they have 60% market share of the entire European market. And we were just updating our analysis there. And I didn't realize that the European crypto market is actually, in volume terms, larger than the US. This really is, and of course, Asia is quite big as well. And Brazil has, shown quite a lot of growth. So this really is a global macro phenomena, the, invention of cryptocurrency, the advent of crypto. I always say it's the biggest global macro trade of all time, largely because you have people in each country around the world who actually, up and down the socioeconomic strata, no matter what your wealth is, no matter, own cryptocurrency. And so it's very widespread, the ownership. And so, and that's because it's decentralized to begin with. And, I think this is something that we haven't seen before. Global currencies, which I traded for many, many years, realistically, there are only like 15 currencies that are really tradable, and now, well, not only do you have many different cryptocurrencies, but you have people all around the world able to transact in all sorts of things all the time. I mean, it's a phenomenal innovation. I just don't know why everyone else is taking so long to get it, right, in terms of global adoption being further along.
Tapiero also notes the growing use of blockchain technology and digital assets. He mentions that new developments, such as Bitcoin and Ethereum ETFs, have attracted more people to the crypto world, while projects like Coinbase's Layer 2 solution have expanded decentralized finance. He invests in companies active in the digital asset space, supporting the growth of this ecosystem. Despite his long experience in traditional markets, including being a gold guy, he sees both gold and Bitcoin as complementary assets in the current economic climate. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.